The oil industry absolutely collapsed recently, dropping over 30% in a single day, and now it sits at levels that we have not seen since the 1980s. So what do I think of this whole situation? What does this mean for oil stocks? And of course, the big question, am I personally buying any oil-related stocks right now? I am going to share all of this and more with you guys in this video here today. This was a highly requested video. You guys really want to hear my thoughts on these companies. So I thought I'd spend the time today to really compare these companies side by side, give you my thoughts on it, and kind of then disclose what positions I own, if any. So if you appreciate this requested video here from subscribers, all you have to do is hit that like button down below because it shows me that these are the kind of videos that you want to see moving forward. So let me start off with my thoughts on the current situation and what's going on. But let me put a huge disclaimer out there. I am not an expert when it comes to this industry, but a lot of you guys watching are. So if there's anything else that I missed or you want to add, make sure you do that in the comment section down below. So anyways, honestly, this recent drop that we've seen in the oil markets came as a shock, not only to me, but to the market in general as well, which is why we saw such a drastic move essentially overnight. So what happened is that OPEC, which stands for the Organization of Petroleum Exporting Countries, which essentially is a group of nations that collectively decide how much supply of oil there should be out there in the market, went out and proposed to make some cuts to production of oil to help with the other global crisis going on right now. But Russia, who is one of the largest producers in the world, came out and said they will not be doing that and they will be producing as much as usual. So, in a bold move, Saudi Arabia retaliated, which is another large oil producer, and they pretty much said, fine, if that's how you want to play it, we will cut prices and we will increase production. This essentially is an attempt to force Russia to back down and say, okay, we will follow what the OPEC guidelines are and we will cut production. And well, the result of this conflict is exactly what we saw in the markets. A 30% drop in oil prices essentially overnight. And this unfortunately comes at one of the worst times when there's something else going on in the market that's pulling down the whole global economy. And this is yet another black swan event that we couldn't have seen coming, which really will put a drag on the economy here in 2020. It's unfortunate how this is playing out and when this is playing out, but I am hopeful that there will be some sort of resolution very soon. The US is actually prepared to step in here and come to some sort of resolution here with these countries, because what's going on right now hurts a ton of US businesses and Canadian businesses as well, because Canada, as you may or may not know, relies heavily on the oil industry. So I don't know when this will happen, but I do believe at some point in the near future we will see some sort of common ground found between these countries. So now that's kind of the backstory here. So what does this really mean for oil stocks moving forward? And when I talk about oil stocks, I'm talking about the large giants out there in the world, like ExxonMobil, Chevron, BP Petroleum, or maybe even Shell. Well, clearly you can see here on the one-year chart that all of these companies are down 50% or more. So this has not been a good time for oil-related stocks. This is because when prices drop, their earnings and profits shrink, and as a result, they are less attractive to investors as their PE ratios rise. The end result is extreme selling, like we've seen here in this chart, and investors get hurt pretty badly from this. Not only that, many companies will also get hurt from this, as this just adds even more pressure to the current existing issue in the world. So a combination of both of these issues with all of these oil or energy related companies and the other issue that we're dealing with right now in the world could very well mean that a lot of these smaller businesses could go out of business very soon. Large debt loads, which a lot of these companies hold, which we will see soon, combined with shrinking earnings and revenue, will be a recipe for disaster for many companies, and unfortunately, a lot of layoffs will follow as well. So now in terms of these stocks, am I buying any of them? First, before I get into that, let's compare these stocks side by side, compare some of the biggest names out there, and kind of look at where these businesses stand on a fundamental level, and then I'll disclose to you guys what I'm doing here. So here's a comparison of some of the largest oil companies in the world. ExxonMobil is the largest with a $138 billion market cap. Chevron is a second place here at $111 billion, Shell at $96 billion, and you can see that pretty much the two American giants are dominating here in terms of size. We also have BP and ConocoPhillips here on this chart. Now, if I recall correctly, ExxonMobil used to be the largest company in the world at some point until Apple eventually surpassed them. And this trend has continued over the years as Apple has continued to grow and Exxon has continued to shrink. These companies employ so many people that, and guys, these companies employ so many people, so just imagine the amount of layoffs that we'll see if these struggles continue. ExxonMobil and Chevron employ over 120,000 people alone, so this will be a massive hit if we do have to see layoffs starting to happen. And you also got to keep in mind there's a lot of smaller companies that are not listed here that employ thousands more people, so this could end up being a very big issue for the world economy, really, if things continue down this path. Now, jumping deeper into their financials, their revenue has been poor. In fact, all of them have declined revenues year over year. The forward outlook doesn't look too good either, with more declines expected. And now with the recent developments, this could be much worse. These once massive growth giants are now on the decline as the world slowly shifts away from them. We'll still have a long ways to go from this shift to actually take place and for electric and new energy and clean energy to actually take over. But I do strongly believe that in 10 years, these companies will be smaller companies. So here we can see their profitability, and you can see although revenues are sliding, profits are still healthy for the most part. Chevron actually surprised me with a 42% profit margin, which is outstanding, but their net income margin is still a measly 2%. ConocoPhillips is an interesting one, and I haven't looked deep into them, but their numbers here show that they are the healthiest of the bunch by far when it comes to profitability, so it may be one to actually look into further. Now, I know we already looked at their charts and performance, but here I want to drill home this point. In the last 5 years, during the raging bull market that we've seen, where many stocks are up 50 to 100% or more, oil stocks have returned negative 50% on average. Yes, we have seen the market correct, and yes, we have seen oil collapse recently, but still a 50% negative return in a strong market over the last 5 years, that is concerning. You're probably wondering at this point, everything just looks pretty gloomy here. Why would any investor put any money into this sector? And the answer is because of dividends. Energy stocks or oil stocks are known for their dividends, but when we really look into their dividend fundamentals, there's some weakness that I see here. The first thing that you see here is their yields, and yes, they look very appealing, but when I see companies yielding 10% or more, I personally get worried. The best yielder is Royal Dutch Shell with 15% currently, and their average yield over the last 4 years was the highest as well at 7%. The big red flag is the payout ratios, however, for all these companies, which are all out of whack, and every single one of these companies pays out over 100%, meaning that they pay out more than they earn, which of course is not a good thing. Some of them are even over 200%, which is even worse. So guys, this is concerning to me, and this is a big red flag. But if there are any oil experts in the group that have a better idea as to why this is all out of whack, let me know in the comment section down below. Now with the dividends, Exxon is also the only consistent dividend payer here with 37 years of consistent growth, which actually makes this company an aristocrat, which is respectable. And guys, these are some behemoth companies still, which is why I said the shift away from oil will be a very slow one. Royal Dutch Shell still pulls in around $350 billion in revenue, and the American giants pull in a combined $400 billion in revenue annually. So these are not small numbers. Profits are still looking good for now because of these large revenue incomes, even though margins are low like we previously saw. Shell and Exxon have the best net incomes, around $15 billion, which is respectable and gives them a good cushion currently to weather the storm we're currently going through. But finally, looking at their balance sheets here, things start to look gloomy once again, because if you look at the cash balances for these companies, they aren't that impressive. Shell has a decent cash balance. BP and ConocoPhillips also have an okay cash balance, but the two American giants, Chevron and Exxon, don't have a whole lot of cash on hand. Now you combine this with their massive debt loads that they have, and you have a recipe for disaster in this current situation. Exxon has some big short-term debt due soon, and we'll have to wait and see what happens here. But if the current issues prolong and the demand and consumption of oil keeps dropping, we may be seeing one of the largest oil companies start to crumble. And if that happens, guys, brace yourself, because we're going to be in for a lot of issues. I personally hope that this does not happen, because I know so many people are invested in these companies, and these companies employ so many people. So just for the sake of the economy, I really do hope that these companies come out of this okay. But looking at the facts objectively, these companies do concern me, and there's a lot of red flags that we just saw going through their fundamentals here. So now with that said, am I buying any oil or energy related stocks today? Nope, no way. I personally do not understand this industry well enough to really confidently put my money into, and that's a core reason as to why I choose not to invest in these companies. I do not currently own any oil stocks, and I don't plan to own any in the near future. The future I see is one where we rely on renewable energy and electric, so investments like Tesla make sense for me. So it would really go against what I see in the future if I put my money into these oil-related companies. And I think just by looking at their balance sheets here, it kind of tells the whole story. These are massive companies. A lot of industries rely on oil still, but these companies are not that healthy when it comes to their debt and their cash. So a black swan event or two black swan events like we're going through right now could put them under a lot of pressure. I think that the 5 giants we talked about here should be okay, but a lot of the smaller players will most likely crumble under these pressures. Maybe these bigger companies start acquiring them. Maybe that'll help them grow over the next few years. We'll have to wait and see. But either way, I think at this point, it makes sense for these companies to either reduce their dividend or cut their dividend completely. So I would not be surprised if we see that happen with these companies. The only one that may surprise me is ExxonMobil because they've had a long 37-year streak of growing it. But like we saw, the prices of oil have hit multi-decades low. So a dividend cut may actually happen with that company as well. So those are my thoughts on oil or energy related companies. I'd love to hear what you guys think. I'm sure a lot of you have a lot more insight into this industry than I do. So let me know in the comment section down below if there's anything else you want to add to this video. Thank you guys for watching. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.